Happy Information Wednesday, Shalise McQueen here. Per my video, I'm talking all about flood insurance today, particularly flood insurance that is issued through FEMA, which is about 80% of our flood insurance policies. FEMA stands for Federal Emergency Management Agency. And as of this coming Friday, they're doing a major rate revision called Risk Rating 2.0. And this is going to cause a lot of rippling effects with all of our insurance policies, and insureds are going to see a big rate increase. I'm going to get into that now. So up until now, how FEMA actually did their rating for flood insurance is, number one, it was all based on being in a 100-year floodplain. And number two, it was based on pro rata share, which means if you're in that flood zone, you basically are sharing the load with your other insureds, and that's how it's kind of being compensated to the flood insurance company. Well, the reality is that wasn't very fair because it made some flood insurance for other people not affordable and others that should in essence have paid a lot more beyond affordable, and it wasn't exactly a fair system. Plus, with all of our national issues with global warming and all of the recent flooding, we are seeing that this system as it sits now does not work and quite frankly is bankrupt, which is no surprise. It's a government program. I mean, since when do government programs actually work for anybody? So this, in theory, is a good thing, but I'm going to really get into more detail of what this may look like for a lot of you. So at a quick glance, what FEMA's Risk Rating 2.0 is going to do is, of course, still taking consideration that you're in a 100-year floodplain, but they're now going to look at you as an individual. And by you, I mean your property and the land, look at the history and see if there has been any past claims, and also look at doing some reevaluation of elevation certificates, find out if the mapping and the grades have changed to where you are more prone to risk for flood or maybe less prone to risk of flood. And this will hopefully reevaluate things and maybe do more of an equal share as what they're trying to do. However, it is a government program. And the reason why I'm bringing this to your attention above all is it is estimated that 75% of Arizonians are going to see an increase in their FEMA flood policy. So with 75% of us going to see a rate increase, again, I live in a 100-year floodplain, so I'm sure I'm one of those lucky 75%. So there's no better time than now to review your flood policy, to see what your increase is going to look like, what you're currently paying, because most of you probably don't really know because it's paid through your mortgage company. But more importantly, unlike your homeowner's insurance, your flood policy does not necessarily increase the dwelling amount that you're insuring against a flood. So if you took your flood insurance policy out 10 years ago, more than likely you are way undervalued considering what it would cost to rebuild your property in today's market. So definitely do yourself a favor, do your due diligence, and pay attention to what you're actually being insured for, because more than likely it is not sufficient. So with today's flood insurance conversation, remember to ask yourself, are you protected? As always, you can reach me at 602-525-5665 or email me at cmcqueen@farmersagent.com. We'll see you all next week.